The revolving door is an interesting situation because not many will know who is who and why it matters. In 2008, countless people from Goldman Sachs and other financial institutions worked in government positions, back and forth, in one company and on to the next. When the crisis was over, it was time to rebuild. In order to reform the system, the government called upon the very same people who created the mess in the first place. Not only was it not resolved, you should realize that it's simply a matter of fact, they certainly do control everything. You came here for the truth, so let me unveil that for you. Today we're going to talk about everyone's favorite, Janet Yellen. It's important to look at what she is up to and what she's been up to, but not just her. To use this as a perfect example of the revolving door and how all of these different institutions and then government agencies are not there to protect the people, but certainly to help each other out, to make sure that it's business as usual, just one layer deep. You don't have to get into the details on such a deep level. You could simply just look in one layer and you start to reveal so much. But they know the public simply will not do so. They're too busy. They're too distracted. So we're going to get into some of that today. And then if I have some time, I want to cover some other issues here. Let's get into it right away. All right, so let's start with the basics here. Yellen summons regulators to discuss financial market volatility. We're talking about GameStop. We're talking about the stock market going crazy, especially a few names like GameStop, AMC, and so on. Now, these have come down as I record this from their peak, anywhere between 70 to 80%. This had created this huge swing, a whole bunch of retail traders getting in. We had hedge funds profiting off of that. Other hedge funds not doing so well as a result of that, depending on what their positions were. And we'll actually cover more about that in a second. But the point here is they want to see if there's any wrongdoing, right? And on the surface level, everything seems totally fine with that. So let's look at this further here. Treasury Secretary Janet Yellen has summoned U.S. financial regulators to discuss recent volatility in financial markets in her first public effort to address the tumult involving GameStop shares and Robinhood. All right, was there a problem? And they're going to certainly make sure that everything is just fine. Well, we know specifically that we can look back into the pages of history and see were there any other examples where there were serious problems and then these different agencies came together to resolve it. Well, you look at what happened during the financial crisis, and we have a perfect example right here, the SEC. And not only was it a matter of turning a blind eye to allowing all the nonsense to go on, they were complicit. They were making it happen. It was a matter of fact. Okay, we saw all the ninja loans. We saw all of those different aspects of the subprime mortgage crisis. And that's a whole web of different things. But that was allowed to happen. And it was okay because supposedly the problems were contained. They were just subprime mortgages. And the SEC was looking at it. You had other agencies making sure that this did not spread out into the other realms, the financial system in the United States, and then go beyond that. But guess what? Once they figured it all out and everybody started to realize how bad this was, the financial system around the world started to fall. And it was very clear by 2008, even while the Federal Reserve was suggesting it was okay, we don't have to see any future crisis, we got this handled. Things got worse and worse and worse. And today, nothing has been resolved. Look at what happens here in this case. Yellen called a meeting with the SEC, the Fed, the Federal Reserve Bank of New York, and the CFTC. And what do they want? They want to make sure that everyone's on the same page and they're going to fix any problems, right? Look, it's all a show. They tell you that things are going to be changed. And largely, if anything gets changed, it's only more difficult for you as the individual to do what you want to do. It's less freedom for you and more control for them. It's never going to be something where these financial institutions are unable to get to where they want to be. We know that all of any protections that were put in place, they all get repealed. Every single time. These companies can be as big as they want. They could be intertwined. They could intertwine the derivatives with the institutions that hold on to deposits, and that should never have been allowed, but of course it is. So let's go one level deeper. Yellen earned $7.2 million in speaking fees over the last 2 years. This is important for some to see how much she has made. Now, I don't think the fact that she was doing these speaking engagements, making that money, is a problem. That's not the problem. The revolving door is, because now she just took $7 million from these companies in a matter of just 2 years. So what's that going to look like when she's got to start protecting the people if there's something going on from these companies? Look, her amount of time in this position, who knows how long it will be? It could be a year, it could be 4 years, it could be however long. But at the end of it, she still needs to basically have a job. So what's that going to be? She doesn't want to make too much of a mess. She wants to help her friends out. She's got people on the inside of these different companies. They all want to look after each other, just like you would in any other business, except this one is much more concerning because it affects so many different people. This is just a chart form of the speaking fees. If you're interested, you could see right here. Of course, Citadel being one that even just recently had paid quite a hefty sum to her. So that is a little bit of extra information. We'll need that in a moment. There's just one point in this article that I wanted to make before we move on to the next bit of information. The Daily Poster has found that many of the same companies and groups that have been lobbying the agency that Yellen has been selected to run. So we've got these companies, these big institutions, and then suddenly Janet Yellen is in charge of this department and they're supposed to be looking at them and scrutinizing them. And I'm not exactly sure that this is a very good thing, because you've got some people here who, quite frankly, are unable to make sure that this is all good on the inside. We don't know. We don't know what happens behind the scenes. And that's part of the problem. Janet Yellen accepted $810,000 in speaking fees from Citadel, owner of Robinhood. Reporter, are there any plans to recuse herself from advising the president on GameStop and the Robinhood situation? And of course, the response, no, and she's an expert and deserves that money. Again, the problem here is not the fact that she took the money. It's that when she's in this position of power, what does that mean for these particular institutions? That's the question I pose. Mudrick Capital gains $200 million on AMC GameStop bets. Jason Mudrick's hedge fund reaped almost $200 million on its stakes in firms that skyrocketed during the Reddit-fueled trading frenzy in recent weeks. So they had done very well. It wasn't just the retail traders, but any of these big companies who were trading on the information that they were seeing, they obviously were, if they were able to sell off the right time, profited to a great degree. Now, you've got companies like Citadel, who I find very interesting in this situation, because you are seeing the retail traders that are using Robinhood, among others. They're using Robinhood. All of the orders that they're putting in are then sent off to Citadel. They use high frequency trading to be able to see these trades before they are actually processed and work within those systems to make money off of the other individuals putting their money in. This is the way it works. It's not a matter of, one side versus the other. The hedge funds, those in the financial industry, are able to profit on every single situation. Yes, there's going to be some that fail. In fact, if you look at what happened with hedge funds outside of 2020, you go back just further than that. From the financial crisis on, they didn't do very well at all. Many of them had to close down. In fact, I think it was a 2020 stat that I read to you. It was basically just showing the fact that there are more hedge funds closing than are opening. But we look a level deeper, and I think it's so key to understand the fact that we've got the Federal Reserve actually fueling this in the beginning. They are the ones that make this happen. That connects me into the next point. We're talking about real estate. And without the Federal Reserve, we would not have a problem like this today, because the fact that we've got interest rates at absolute rock bottoms, which means we've got mortgage rates at absolute rock bottoms. You look around the world and you are seeing interest rates at historic lows. Some have brought interest rates up a degree, but ultimately we're at or near the bottom everywhere. And this has generated a massive boom in real estate. People can't afford that real estate, but as long as interest rates remain at record lows, you're not going to have a problem. That's going to take a lot of money to be printed, because of course, in order to get the interest rates to go down to these levels, you have to print money. There is no exception. In the Federal Reserve, they call it open market operations. And in order to get these more open market operations to happen, there needs to be money printing. You can't just set interest rates in a computer and it's all okay. There is actually a toll. There is a cost, and that comes with the devaluation of the currency. Now, here we're talking about the American Enterprise Institute Housing Center, and I wanted to show you something for, in just a second, but let me quote this right here. The housing sector has more than fully recovered from the downturn. That's Powell. Well, what they had to say was there is no justification for continuing or increasing investment in agency MBS, mortgage-backed securities, and that's completely accurate. As I've said many times before, why in the world is the Federal Reserve printing all this money, reducing interest rates, and any central bank, really? Why are they doing all of these actions at the same time telling us that things are okay? I think there's a disconnect there. If you want to check out AEI's website and this report, of course, as always, I will have it in the description. But there's just a point that I think, it's really key to check out here. The Fed's monetary punch bowl is fueling rampant home price appreciation and is misdiagnosing the impact on the housing market. And that's very clear. We know that. And they're suggesting, the Federal Reserve is suggesting, that you don't have to worry because there is no bubble. But if you look at what happened in, let's say, early 2000s, they said there's no bubble. Mid 2000s, you go in 2005, no bubble. 2007, they started to talk about just a little bit of a bubble, nothing to worry about. And even in 2008, they said there's nothing to worry about, it's contained. And that's how delusional they think that you are, because they know what's going on. They are always going to manipulate this and create the crises because they want to remain in control. They create a crisis to remain in control. That's the way it works. It's not as if they're trying to stop it from happening. No, they grab control, and it's always the case. Fed president after Fed president have told us that there's nothing to worry about here. Everything is in a recovery mode. We're going to be just fine. And what they have all said, every single one of them, is what Mester had said. And she said here, fiscal policy is the tool that you need to really direct relief to get through this period. And essentially what they're talking about is government stimulus. They know specifically that their programs are not going to actually resolve anything. So they're saying the government needs to do more. Well, the government has already done a lot, and they're trying to get another bill passed. They will. The question is, how big will it be and who gets the cash? We'll see what happens. Here we go again, it seems. American Airlines sending 13,000 furlough warnings. 13,000. We're going to see what happens, see if more aid goes through to these institutions, whether it's the airlines or any of the other ones that have been hit really, really hard throughout this period. But ultimately, what we have seen is that there's a lot of taxpayer dollars that have been going to these different organizations. And ultimately, I don't know if this is actually the best use of capital for people, because we see what these companies do. Not necessarily American Airlines, but we've seen bailouts taking place, and then they start doing major renovations. There were so many examples during the financial crisis where the CEOs were getting tens of millions of dollars in bonuses. Meanwhile, the entire company is just going under, and we found out that the CEO was complicit in so much of the activity that was taking place. This is time and time again where these big institutions, they got the revolving door. They are in bed with the government, and nothing bad really ever happens. Generally, there's a slap on the wrist here and there, and it's business as usual. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to learn about e-commerce, you want to sell stuff online, I teach you for free at the AmazonGPS.com. If you are interested in the financial system, the central bank activity, everything to do with this is located in these two books. You can check that out at the link in the description. And if you haven't seen this video yet, you definitely want to check it out. Click it. I'll see you there.